Oh, good afternoon, everyone. Hey, it is Shooter Scott Henderson, and we are going over swing trade notes today. Of course, at the end of our presentation, please do review our disclosures. Okay, you'll have to forgive me. I ran out of time. I actually crashed my PC Friday. I did that new Aurora download for Ozus, and whatever was in that AI, my system did not like it. And basically on and off the entire weekend. I didn't get up till about 2 o'clock Sunday, so I have not had the chance to go back and update that. And to be honest with you, I haven't found the backup for that yet, so we're working on it. All right, so as far as earnings this week, a couple names stand out. I like Micron Wednesday after the close. I actually like the Lennar, but the chart didn't look good from that perspective. Then we have Nike and FedEx. I skipped Nike because I didn't like the chart as much as I liked FedEx and Micron. And then BlackBerry after the close as well. So those are three earnings names that I like. 4 runs into earnings, okay? I also was thinking Carnival, Norwegian Cruises did really well on their earnings, so I'm thinking Carnival does good. But the chart just was not structurally something that I want to put in there. So, all right. Now, for the folks that are new, we have this scaling risk plan. I suggest that you review that. And if you do not have a plan, I'm going to strongly recommend that you have a risk management plan right where we are, just because of how elevated the indices are. And, there's too much of a chance of a 20% drawdown. So you want to make sure that every structured trade you set up, assume that you're wrong and you're going to have to buy it a little bit lower. So you're putting a smaller position size, scaling into smaller pieces. That's what the suggestion is. Now, as far as the technical ranking, now at some point I'm going to put a scoring system in here so we can track it. I'm still trying to figure out how to make that work where I don't have to track it. I can have AI track it, but we haven't gotten it. So, but ultimately, CELH, we had 43 out of 52 on the score. FedEx, we had a 41 out of 52. Micron, we had a 41 out of 52. And BlackBerry, we had a 40 out of 52. And, last week we did pretty well on those numbers that we threw out for last week. So, all right, looking at FedEx. Now, the whole thesis here, I would not like this stock if we had not had that robust holiday sales coming out of Black Friday. That increase is going to wash into FedEx, and how it will wash into FedEx is going to have their earnings call, and they're going to talk about how much deliveries have picked up because of that. Realize a 2% increase over the projected sales for the entire season. We got 10% in one day. Okay, they could have sizable numbers that pop out on that earnings call. If that's the case, the 78.6 is totally viable. 325, pretty doggone quick. So at this point, my conservative basis, I'm structuring this as a $6 or $8 swing trade. So the swing target is 289. So risk is about 277.52. Now, you could go out to January and do 290 or 300s. The only other date in there was January 27th. I don't like the 3rd because nobody's back to the 5th. So, we may not have any activity at all the first of the year. Sometimes we do, sometimes we don't, kind of thing. So that's the thought. All right, let's look at BlackBerry. Nice week last week. The only reason I put this in here is because it wicked off right at the 50% bank. This usually builds out a flag and then pops to 78.6 around 346. Now, I have 2 Fibonacci levels up here. This is the 50% back level, which measures the high right around 385 to our low around 201, and then 50% back on that is about 293, which is where we tagged here. If you do the Fibonacci extension tool of the prior leg, 50% back is 330. And I don't know if you guys have noticed this, that the counts that I use stair step, just like Elliott Wave stair steps. Just like in my swing trade notes article cover, there's the stair step going up. It's exactly what markets do. So structurally, the next leg should be up to about 330. We came back right to the 23.6 fib and held it. I'm willing to risk $2.51. So about 15 or 18 cents here. It's not going to be a big trade. You want to watch your contract price here. If you're trying to equal this up to, let's say, a FedEx trade that you're going to pay, $300, $400, $500 a contract for. I think the BlackBerry 330 calls were like $8.50. So it's not even it's just difficult to put that many contracts on because it costs you so much money. So that's my thought. So definitely in this scenario, plan on scaling in, but I still like the look and I like the FOMO going into that. Now let's take a look at Micron. Now, Micron, our primary wave 2 has not been filled at trend support. This little thingy right here. The only thing I don't like about it. On top of that, we don't have a divergence low. But this is an uptrend. We don't get divergent lows all the time in an uptrend, especially even with this kind of pullback, because what we're basically saying is this cycle wave 1, cycle wave 2, cycle wave 3 is up here. So in the key to the moment in the wave, we don't get that divergence for an entry. So I like this going to earnings because it's so beaten up and we're building out this ascending triangle. Yeah, whether it happens at earnings or happens a little afterwards, it's going to happen. Just my thought. But 50% back of this leg is 120.83. 50% back of the entire prior leg of cycle wave 1 is 138.48. And our primary wave 5, cycle wave 3, is up at 193. Now, I don't think we get there. Again, I'm going to be conservative. I want to target the December 20th 105 cost. You can go out further than that. The reason I'm doing the weekly is I don't want to pay for Christmas week when I'm probably not going to hold them that long anyways. So most of these earnings that I'm showing here are Wednesday or Thursday. Actually, Micron is Wednesday, and then FedEx, BlackBerry were on Thursday, I believe. So you know, I'd risk $100. So I'm talking $2.50 on this trade. It gets below $2.50 below the current price, I'd be out. I just would take it off just because then we're going back down to trend support. And the idea is I'm going to reload down there. Once we get back down, it'll be about $96 when we get down there. All right. So let's take a look at CELH. Boy, did this get a pop last week. Not huge as far as price, as far as move, but there are 38,000 open July 2025 $40 open. And I think there were like 12 or 14,000 14,000 of them that were added Friday. So my perception is this is far enough out in time. They're paying $400 a contract, $3.8 billion bet on this. Somebody knows it's too big in this market right now. Biggest thing on the tape that stood out to me. So that's my thought. I like the March or April $35 calls. Again, I'm being conservative. All I'm looking for is this $36 wick at the breakout. That's it. Gives me my $5, I'm good. Then I'm probably going to roll till June or July and put on some of them $40 calls. Okay? I want to get paid a little bit and then roll to something else is my thought. So that's what we have for this week, folks. Great trading. Until next time.